We identified back in 2010 that lithium was certainly going to be a metal of the future. The price outlook for it, and again, I read that article a few weeks ago from Goldman Sachs, and you just got to wonder what they were smoking. But if you're down in the black and you own rock in the ground, you're God. If you're in that other space and you don't own your rock, you're screwed by us.
Welcome back to Rockstock Channel, and thanks for checking in. Before we launch into the interview, we'd like to thank all our Patreon sponsors. And for those of you who are new, share a bit about us. RK Equity is an advisory firm run by Rodney Hooper and me, Howard Klein. We are exclusively focused on raising awareness about companies producing or developing the next generation critical raw materials that are powering Tesla's EV battery energy transition. Please register your email at rkequity.com and follow Rodney and me on LinkedIn and Twitter. Please also subscribe to this channel, Rockstock Channel on YouTube, as well as Lithium Ion Rocks on SoundCloud for our podcasts. Please note, Rodney and me are not financial advisors or broker-dealers. Nothing you hear in this video is investment advice. Please do your own research and read the disclaimer at the end of this video or on our website. Thanks again for the support, and let's get into the video.
It is Monday, Labor Day, September 5th, and we are about to go kind of back to school. So the title of this one is A Back to School Easy Money, in connection with my monthly Lithium Ion Bull issue number 79, where I feature prominently, Piedmont Lithium, which had major news last week. I joined them for the button pushing, not bell ringing, but button pushing at the NASDAQ on Monday afternoon, and then I joined them for drinks and a great steak dinner with 10 or 12 members of senior management and the board. Piedmont, subsequent to that, announced the headquarter opening in Belmont, North Carolina, and very prominently in Tennessee, a brand new plan for 30,000 tons of hydroxide production for their second hydroxide plant. At both the Tennessee announcement and at the headquarter opening in Carolina, there were very significant politicians. U.S. Senator Tom Tillis spoke in North Carolina.
I do remember the meeting with Piedmont Lithium back in 2018. And since then, I've been keeping close track on this project, but I've learned a lot since then. I just came back from a 4-continent, 48 hours of air travel. One of my stops was in Argentina. Argentina has a lot of promise for lithium production. We're talking with them about their desire to get into it. And they say it's all about politics. I went to Serbia 4 months ago, another major deposit of lithium, trying to figure out how they can overcome the concerns. Chinese have a stated strategy of being the world's economic and military superpower by 2050. And they don't intend to do that through a great war. They intend to do it by putting their tentacles around the globe economically. They intend to make sure that the Western world is dependent upon them for lithium, for tantalum, for rare minerals, so that they can literally beat us by never firing a shot. And how on earth can we sit here knowing that we have the ability to be independent, that we have the technology and the stewardships to do it environmentally sound? How on earth can I go to Australia as well, but Argentina and Serbia and so many other nations and say, we need lithium, when they know that we're sitting on top of the largest single deposit of high-grade lithium in North America? It seems a little bit disingenuous to say we want you to mine, but we don't want to. We have to lead by example. And if we do that, we'll accelerate our self-dependence and eliminate reliance on China by decades. That's why I support this project. I support it being done responsibly. I'm working with the North Carolina Department of Environmental Quality, and we're going to make sure that every box gets checked, because we need this to be successful so that we can go to other communities and convince the rest of America that we have to do our part to not let it even conceivable that China could achieve its relatively short-term goal. 2050 is only 28 years away. So I think we all have to come together and recognize the economic value of this project. Hundreds of jobs, but I also think about jobs that had nothing to do with this project, literally but it has everything to do with future economic development for the state and for this region. This puts us on the map. I talked with Toyota. I talked with VinFast, a $6 billion electronic vehicle manufacturing project that's been granted not far from Raleigh. I've spoken to them and I've asked them, how important was this potential to your decision? They said it was very important facts, but it'll be more important when we actually see production. So we have to work together, do it right. We have to listen to concerns of some folks and try to address the concerns. But make no mistake about it, I want North Carolina to be the first state in the nation to lead by example. And then we'll move on and do what we need to do for this great nation. And for great companies like Piedmont Lithium that are doing their part and taking the risks that they were taking, because it is significant. So thank you all for being here. Mayor, thank you for your leadership, Donnie, and thanks again to Piedmont Lithium.
And I think the governor and the mayor in Tennessee was also present, as well as some economic officials in Tennessee. Tennessee earlier this year, Ford and the Blue Oval SK announced some 11 billion plus of investments in that state, and in Kentucky. Tennessee is very much, and the Southeast generally, is becoming a major, midstream and downstream hub, auto alley for the EV supply chains.
On behalf of Governor Lee, it's certainly my pleasure to announce that Piedmont Lithium will locate right here in Etowah. Yes.
Lithium today is all for the electric vehicle business, and we've been looking for a location to build another lithium hydroxide plant. It will be the biggest lithium project ever built in North America. It'll be the cleanest, most sustainable lithium project in the world. Right now, all the production is pretty much in China. It will double current American production. It's a $582 million project. It'll employ about 120 people. It'll take a couple years to build, and we'd like to be producing lithium hydroxide in 2025.
Now, on the very rails on which this town was born, it will continue to grow, expand, and diversify its economy. Thank you to Piedmont Lithium. Thank you for making the right choice. Thank you for building it right here. We are excited to be a partner with you. Welcome home.
We just know what this means to all the citizens. It's a higher paying wage compared to the average. It's those kinds of things that we just get so excited about because it literally changes lives.
These are future-facing jobs. And in time, we also hope to bring other allied industries into the community. I'm sure they'll find this to be a great place to operate as well.
When we hear about the demand for lithium hydroxide and how we in McMinn County and Etowah actually get to be an answer to a problem, I think folks, we're going to see things going down the road, electric cars, and say, hey, that battery is made possible because of us. So I think they take pride in that, absolutely.
There's been talk about the power cuts in Sichuan. I read an estimate of about 3,000 tons as an impact, although I read again today, they said it would, you don't just ramp straight back up to 80-90%, take a little bit longer. So there's been a bit of an impact, but the price essentially carbonate back up over 500,000 renminbi in China, which is what we said. We said it was inevitable. It's now happened. The reality is we're only early September. And I think the rude awakening is going to come even when those plants come back online and there is no impact and COVID impact in the quinine brines and so on, that you're still seeing strong pricing. So I think that's going to be the rude awakening. You've got, China extending its subsidies to the end of 2023, which is going to give impetus. Looking at the messaging coming out of SQM, Allchem, MinRes, all of them are very positive. Chris Ellison going as far as to say, he didn't know what Goldman Sachs was smoking when they wrote that report.
We identified back in 2010 that lithium was certainly going to be a metal of the future. There is no alternative for lithium at the moment, and it can't be replaced. It's one of the few commodities out there that has got really good visibility, and I don't understand with a lot of the analysts. I mean, if you get your little thing called Google, you can get on there and it'll tell you how many cars they're going to make this year, next year, and the year after. and it'll tell you where the producers are with rock and brine. It's not a hard equation, but we're in supply deficit at the moment, and it feels like it's going to stay there through till at least 2030. The hard rock, probably the better source of lithium. I think that generally speaking, the battery manufacturers get much more power retention in the hard rock batteries. The price outlook for it, and again, I read that article a few weeks ago from Goldman Sachs, and you just got to wonder what they were smoking. But you know, if you have a look at this chart here, that's us. If you're down in the black and you own rock in the ground, you're God. If you're in that other space and you don't own your rock, you're screwed by us. And it's a really good place to be. I mean, I haven't been there very often. I've been on the other end, but right now I feel really, really good about this. So over half the hydroxide around the world is made by people that don't own rock in the ground. This is a huge supply problem. I like it.
Only he could say that in an earnings announcement. Their forward expected price curve for lithium hydroxide in 2025 is $55,000. So, you know, an outlier high for 2025.
You did, write a LinkedIn note with your price forecast, for lithium, which reflects a stronger for longer, but not quite as aggressive as our friend Joe Lowry put out over the weekend, which is something I'd encourage everyone also to read. And in time, we'll speak to Joe on this channel or his podcast.
I agree. The only thing, I guess, things to watch for, Howard, which I warned previously, is the European OEMs are under no pressure now until 2025 to sell more EVs because the CO2 emission target stays flat now. So as long as you reached it in 21, you're kind of in the clear and you can keep that level. And this year, Europe is not producing the goods on EV sales growth. It's marginally up, whereas China is strong and the US is strong. So you have to just sort of, factor that in. If you were hoping for big things out of Europe, I can't see it happening until later on. And we don't know what China will do post 2023 when those EV subsidies fall away. The other thing is on the supply side, and it's interesting because Chris Edison was so strong on how powerful a position the miners are in with spodumene, etc. But he mentioned that Wodgina could sustain another 3 trains on top of the 3 now, which would be another 750,000 tons. And that, to be honest, I haven't factored into my models. So it will take time to ramp the first 3, but if that comes up online, that's a bit of an outlier I didn't see, but maybe the money's too tempting for them to go for it.
I don't know where the development of Wodgina ends, but I mean, it can handle another 3 or 4 trains on top of what it's got now with a lot of ease. So we'll see how that develops. We've got a joint venture partner, and we bring product on in line with demand.
I mean, they definitely loosened up his language on ability to sell spodumene, the Marlboro joint venture. There seems definitely that there are going to be a timing, difference. The time at which conversion either comes online or is bought, and time that the spodumene from Wodgina is ready. And to the extent that the conversion's not ready, but there are other converters with sufficient capacity to take the spodumene, Mineral Resources, he said he's going to whack it into the market.
So we're obviously up front, we're going to be producing more spod than we can treat because we don't have the plants for it. And we may use toll treaters long term. So,
but if can you sell spod if you can't find a toll treater, or is that part of it?
We have an agreement with them that if we're producing more spod than we can either toll treat or go put through our plants, we're going to whack it into the market and sell it. Yeah, we've agreed to do that.
How did you notice in the language about the marketing rights coming back to MinRes?
The other thing that we've done is that a while back, Albemarle had all the marketing rights, so they could market it to whoever they wanted for whatever price they wanted. So part of the trade down on the sell down on Kemerton was that I want control back of my pricing. So they're still going to sell our product. but they sell it under our model. So we have a combined indices that we want them to sell at. So whatever the indices is on the day when we load the ship, that's what they'll pay. Very much like iron ore. When you load a ton of iron ore on a ship, it's that number that's published. So what I don't like to do, I don't like to hedge any of our commodity or any of our dollar. We just take the price of the day. Albemarle asked me what I'm going to do one day when it all turns around and there's more supply than demand, and I said, I'll do what I always do, I'll change. But in the meantime, while it's supply short, we're going to take advantage of the price on the way up. And I am fairly convinced that I've got 5 to 7 years of that.
Albemarle should not be taking price risk. They can't have like fixed rate hydroxide and then be buying the 50% share from Wodgina, at a variable price. So might that tip Albemarle to do what BHP and Rio did in the iron ore market, in 2010, move off those contracts and then go full quarterly, pricing. Chris Ellison talks about this as a commodity. Like if you look at the slides, spodumene is in the commodities camp, under the heading of commodities. And he's basically, he wants to just, he wants to put it on a boat, right? At the spot price, that day. So he treats it as a commodity in the same way that SQM treats it as a commodity. If you look at that calculation, just right now, so they've restructured the joint venture. They got 10% more in Wodgina, and they got 25% less in Kemerton, 2 trains. Okay, so the 10% on Wodgina, you just said they could expand by another 3 trains. Just trying to think about like how you could equate the economic value of 10% Wodgina versus 25% Kemerton.
That's a good point, Todd, because if 3 trains would be 750,000 tons, 7.5 tons per ton of hydroxide. So that's 100,000 tons of hydroxide. He's getting 50,000 tons if he does all of that versus giving up 25% of whatever it is, 50,000, so 12.5. So he must see on balance upside in the Wodgina.
It's going to be very interesting to see this, this push-pull between Albemarle and MinRes as it pertains to pricing, because what's driving prices? Is it spodumene that's driving chemical prices, or is it chemical prices that are, that are driving spodumene prices?
I would say that it's chemical prices, because spodumene still, to a large extent, lags. There's only a bit of spot. The price of spodumene still gets set by chemical prices on balance. As MinRes becomes more an integrated player, he has more and more of a vested interest not to sell spodumene. And you've seen they have an ambition over the next 5 years to have 115,000 tons of effective attributable production volume. That's why it was interesting looking at their forward price on hydroxide would suggest that you're going to, manage this process properly. But Sigma will look to come online and then double as well. Core is drilling. You've got NAL wanting to get up online. You've got Atlantic Lithium. You've got Goulamina. So there are assets out there. So there is. I'm not saying I'm not, bullish. That's why I didn't have a rising price in my forecast, because I do think that people are going to push. And let's be honest, I mean, Ganfin has come up a little bit short in their earnings results showed it slightly on the lower end. And they were sort of wailing a little bit about Mount Marion's feed, because for all the talk of the upgrade process and what have you, only 40% of that feed is high grade. So you need quite a lot of tonnage of the lower grade to produce. So Ganfin has every reason to push Goulamina as fast as it can.
A lot of the assets you mentioned, when I think about this and the broader market, I think we're going to have M&A. The amount of money that Pilbara is making, we covered that in our conversation with Dale Henderson.
You get someone like Critical Elements, you wake up tomorrow and they get the final permitting or whatever. If you look at the NPV versus the price, it makes no sense.
I think there's a bit of a spodumene duopoly at present, which is Mineral Resources and Albemarle, and then Pilbara, right, who have tons that they can kind of bring online. But yes, we have new entrants coming to the market like Sigma and Core. Over time, I think those might get swallowed up by some of these bigger players. Even Mineral Resources said that they're looking at assets around the globe, not just in their Western Australia backyard.
We're looking around the world to make sure if there's any other opportunities out there on lithium, we're keen.
I wrote something on this about 4 years ago, is in the end, there's going to be mid-sized assets that are still quite big that are going to be the stopgap for this market. And look at the valuations of the companies that look like they're on their way to 50 or 100 million tons or whatever. So you've got Patriot, you've got Global Lithium, you've got some of the others, because guys are going to want those long life. Look at remember how shocked we were when Wodgina got the price that it got.
Yeah, I was thinking about that was a great deal for Albemarle. Everyone thought they overpaid, but it's looking very smart in hindsight.
They did, but they took a long-term view. And you look at something like Liontown or what have you, everyone's got commentary, but look at the size of the asset and look at the valuation and where that can go. Some of the stuff that looks to be that, the mid-sized, good-sized 50 million plus tons is definitely going to, in the right jurisdiction, is going to attract interest.
Even a much smaller deposit in core, has a $2 billion valuation because they're producing in the current market. So if you can, produce in the current market before 2025, even if you have a small asset or not even a super high grade asset, you're gonna make a lot of money. So like North American Lithium, owned by Sayona and Piedmont, they're largely fully funded. They're going to start, whacking spodumene into the market, sometime next year.
Piedmont and all that it's released or whatever, it could be generating an unbelievable EBITDA in the near term. But, if North American Lithium gets up next year and Atlantic can get up in 24, then Piedmont's trading on an EV EBITDA of 2 or something ridiculous.
You mentioned Patriot. Ken Brinsden didn't stay in retirement for too long. He came out as the chairman of Patriot, which is drilling in Quebec. I have a chart in the lithium bull of the life cycle of a mining company, right? And you have, the price goes up, in the exploration kind of discovery phase, and then it goes up again as you're going into production, and then you have a bunch of years where your stocks are underperforming while you're going through permitting and partnering and et cetera. So some of the companies you mentioned, like Critical Elements, I would even argue like EMH is kind of like, it's already been discovered. It's kind of like in that middle period, but not yet, on the path to production until they get final permits or final partners and the like. But you mentioned Global Lithium, there's Green Technology Metals, there's Winsome Resources, there's and Patriot, is kind of showing the way for, Quebec, Ontario, Western Australia, hard rock exploration success. But I think it's very telling that Ken and a lot of other Aussies are putting their imprimatur, on Canada, something we've been arguing forever. The time has come, I think, with Piedmont and Sayona bringing North American Lithium, and Livent is going to advance Nemaska next quarter. We're going to hear more about that. Allchem in James Bay. You mentioned Frontier. So, the hard rock to hydroxide, in North America, in Ontario, Quebec, Carolina, now Tennessee, through Piedmont, that's happening. But let's talk a little bit about, graphite and nickel as well, if we could just kind of conclude on that. I had Todd Malin of Talon Metals on a recent, Mines and Money 5 at 5 interview, talking about the Inflation Reduction Act. Why don't you talk a little bit about, nickel, and also graphite?
Into the IRA and the free trade agreement and where components come from, what have you, it's got to hugely favor, domestic resources, where and free trade. So Oz, Canada, are going to should be big recipients, and if you look, the only high grade nickel sulfide development project is Talon, and they've just bought a lot of land around the Eagle mine, so they should be a huge recipient. TIS has already moved in on them for an agreement, but that's highly prospective ground that they've taken around Eagle. It should, with their drilling success and prowess, I mean, they are spectacular drillers. They really are very effective. And then on the graphite side, Nouveau Monde looking to do the commercial pilot of 2,000 tons. They're also perfectly located, zero carbon. Again, graphite plays in Oz and Canada. That's been a China-dominated thing, and they are going to fall outside of that battery component piece. So they should be huge recipients. We haven't seen the move because, see, lithium is in the limelight, but I think graphite's going to have its day, and those that produce are going to, we saw the DOE sign, give a loan. I think they're going to benefit.
That's I was going to say, the very first loan that the Department of Energy gave out was to a graphite processing plant, a very similar business model to Nouveau Monde, except that's a Mozambique mine, and the DOE is financing the conversion in Louisiana. In Nouveau Monde's case, they got the mine and the conversion. That's all going to take place in Quebec.
I don't think people understand the extent relative to other commodities or battery metals, the extent to which the world is reliant on Chinese anode material.
It's crazy. Every chart you see, it shows lithium and graphite being the most growth and the most, I think, reliant on China, but you haven't seen it show up yet in the graphite price. We've said this a number of times.
Under the IRA, I think this is going to, from an American perspective, is going to put ex-China free trade agreement suppliers into the spotlight.
Tesla, there was an article that Tesla was sniffing around in Nouveau Monde. I think it was an Electrek article last week. And there were lots of articles. That's why we did this video about maybe Tesla having a next gigafactory in Canada, because there are all these noises about Tesla lobbying and otherwise looking around at various things in the country. But yeah, there hasn't been a ton of news flow, in the graphite space other than that loan. But
make no mistake, Howard, under
it's
this
coming.
new IRA and under the formulas and what have you, given how much graphite goes into a battery, despite all the talk of silicon doping and all those other things, it's still a fairly small percentage. Graphite is still a key material. It's gonna pop up. I mean, it's just that lithium prices are very high, so on a by value basis, everyone's looking at lithium at the moment. But if prices do subdue a bit, graphite's going to come right back into focus.
I agree. Let's leave it at that, Rodney. This was just a good update. End of summer, beginning of the school year.